everyone, welcome back to my channel. So today we'll be talking on control accounts. Yeah, I think we should have all heard of that. Control account. Control account is a memorandum account. Okay, let me define it according to this my textbook. Control account can be defined as the balance of which reflects the aggregate balances of many related subsidiary accounts which are part of the double entry system. It is the account to which is debited and credited the total amount of all the transactions which have been debited and credited in details to individual debtors and creditors ledgers. So, control account is basically divided into two. We have the total debtors control account and total creditors. So it's just like purchases and sales, like debtors and creditors. Debtors is for total sales, then creditors is for purchases. How? Creditors are when you purchase, you become a creditor because you're actually owing the people who you bought. Then for sales is debtors. So like you sold goods to some people, but they are still owing you, so they are like your debtors. So sometimes the control account can serve as a trial balance, which is a self-balancing ledger. Because sometimes there might be errors which were made in the individual accounts, but control account is just a simple way of self-balancing those ledgers. So the control account is like a summary account for all those personal ledgers, like the sales and the purchases. The sales ledger, they are kept for customers because, like I said, the debtors is just like prepared solely and kept for the customers, while the purchases are kept for the suppliers. There are two hands. This control account doesn't necessarily follow the principle of double entry. The best way to just solve this is by having the format at the back of it. That is the way I've always learned. And that's what my teacher in secondary school told me. Yeah. It's better to just know the format for control. Once you know the format, there is so now the advantages of control accounts. Control account helps in locating errors. It can provide a check on the accuracy of balances of the ledgers. Fraud will become difficult. The balances of the total debtors and creditors can be easily calculated. Let me explain this one. Like now, for non-profit making organizations, sometimes your question, I don't know if some of us have actually solved some questions whereby purchases and sales, like now, if you want to prepare your trading profit and loss account, normally it's opening stock, add purchases. Sometimes we might not be giving the purchases, but we might be giving creditors at the beginning of the year, creditors at the end of the year. That's like owing beginning and end. Then you can even see cash paid to suppliers. So when you look at those three, compare them with the information given. They can't just give you, they'll say you should look for purchases. They won't give you creditors at the beginning, creditors at the ending. With those information given, you'll be able to determine your purchases. And what account do you use? That you use your control account. So you just open total creditors control account, cash at the beginning. It's a you put it on the credit side because it's not an asset account. It's assets. That's total debtors that will start. It always has a it's debtors that have a debit balance, but purchases account has a credit balance. So you start with creditors at the beginning, then creditors at the end will definitely be on the debit side, then cash with suppliers on the debit side. Then once you do your minus and subtraction, you'll be able to get your balance, which you then impute as your purchases. Don't worry, I'm going to solve and I'll give you the format for it. So it also saves time. It can be used to detect missing figures. They allow homogeneous accounts to be grouped together. So the division of the control account, like I said, total debtors control account or sales ledger control account. Debtors and sales, they work together. Then the second one is total creditors control account or purchases ledger control account. Okay, now let me give the format for it.
So everyone, this is the format for the total debtors control account and the total creditors control account.
So everyone, I'll be giving the format for the sales ledger control account. This is the control account for sales ledger. It can also be referred to as total debtors control account, like I said. So let me quickly write the format. Okay, everyone. So this is the format for the total debtors control account. I'm trying to make my handwriting as legible as possible. But if some of us can't actually still see properly, I'm going to snap it and paste it on the video. So as you can see here, I'm going to be explaining the terms because maybe some people are not familiar with some of these terms, but this is just the format. Once you can keep this format, like just attach it to your head, it will be very easy for you to solve any control accounts question. Control account is just basically format. Once you know the format, because normally if they're asking a question, you see something. Let me look at this question now. You see something like credit sales issue. Wait, let me look for something. Okay, payment to creditor, discount received 1,838. You just write your discount received. Where is it? No, discount received. Sorry, discount received is not even in debtor, it's in purchase. You get there. Because the discount allowed 1,838. You see here. You just input, just like substitution, just input your answers. So let me explain the terms which are listed. This textbook did not define everything, but I made some research so I can explain some of them. So now this balance brought forward under here they gave us said it's opening account receivable. These are the list of debtors balances which are drawn up at the end of previous period, like the balance of your debtors from the period. It's like balance we are bringing it forward to the new date. Credit sales, these are the totals from the sales day book. You know we have sales day book, they impute credit sales, goods sold on credit imputed in the sales day book. I hope you all know. So the total from the sales day book is what is this credit sales, not cash sales. So debit note issued, okay, they didn't explain it here, but I got with debit note issued is like a document which a company sends to its customers to inform them on an increase in amount which they owe. For example, now maybe the customer notices that their account was maybe debited for a particular reason. It could just be for additional charges or maybe corrections. So like it's a way of keeping track of the transaction between the company and its customers, just to inform them that there's an increase in amount which they owe to the company. So that's why it is issued. It's a document which is issued to the customer. Then interest charge on overdue accounts. I don't really know much about this, but I know it's the format. Interest charge maybe on overdue accounts. Please let's research on that one. Then dishonor check. Dishonor checks, these are checks which are not honored by the bank. They are checks which are maybe cancelled due to maybe wrong figures, insufficient funds. Many reasons why a check can be dishonored. So discount disallowed. Maybe discounts that maybe was proposed by a customer but they are not allowed. Discounts allowed on the other hand is maybe a company is selling goods to maybe a customer, then they give them a discount of 5%. That 5% is the discount which is allowed to the customers. So it's from the company to the customers. Okay. So carriage outward. This is the course. Carriage outward, if you can remember in one of my videos on manufacturing accounts, yes, and trading profit and loss account, carriage outward is the amount you use in returning goods, like returning goods. Carriage inward is actually what is. That's why carriage outward is an expense. The two of them are actually expenses, but carriage outward is the amount you use in returning goods. Carriage inward is amount you use in bringing in goods to your business. Cash from customers. This is the credit side of the control account. Cash from customers. That's like they've already paid you, your customers have paid you. All these things are self-explanatory. Check from customers. Maybe, okay, there is we normally open a cash book. Those are under source documents. We open cash books which has bank and cash column. So when you find this check from customer, it's under the bank column of the cash book. Under cash book, there are two columns, which is because some people pay through checks and some people pay through cash. So bank aspects are under bank, check aspects are under bank, while cash are under cash. Return inwards. In our trading profit and loss account, we less return inwards from sales. Return inwards are goods that maybe the customers don't like, maybe it's spoiled, they just returned it. So that's why it's an expense. You reduce it from your sales because it's no longer a sales. They return the goods. They are no longer buying. So that's why you have to reduce it. Do you get? They don't want the goods again. So you reduce it from your sales. So you reduce the amount of sales. Bad debts. Bad debts. That is maybe irrecoverable debts. It's under here because total debtors account. So irrecoverable debts, like maybe the person that was owing you peradventure dies, so it's referred to as bad debts. Then discounts are allowed, like I said. You reduce maybe 5% on maybe your goods of 5,000, or you give the person a 5% discount. So the amount definitely reduces. That discount allowed. Credit note, you should have explained this. And bills receivable. Bills receivable is like a written promise by a customer to pay or an amount for which he bought at a future date. Like it's what companies use, like an official agreement. Maybe they are owing, because the customer is obviously owing the company, so the customer is just writing a written promise assuring the company that I'll pay on so date. So after that date, once that date arrives, the company has all the right to demand for their money. The contract entry here, in this case, the supplier is also a customer. So like a customer can actually, a supplier, sorry, I said the supplier is also a customer. A supplier can actually sell goods on credit to a customer. And on the other hand, a supplier can also buy goods on credit from a customer. So the interdebtedness of them forms a set-off. Like once the supplier is owing, the customer is owing, it just needs to set off. That's what it means here. Supplier here is also a customer. So then balance of the account. Like I said, you always have a debit balance account. So once you do your balance carry down balance, you have it. So now let's move to the format for the purchases ledger control account. So everyone, this is the format for the purchases account, the total creditors purchase account. As you can see here, the balance brought forward is on the credit side. It's a liability account. A creditor account is a liability account, and liability accounts have credit balances. So balance brought forward, that's the total creditors balance from the previous period. That's what we write here. Credit purchases, the total credit balance amounts from the previous period. Then it is actually from the purchases table. Just when we have sales table, is when we have purchases table. Discount receipt withdrawn. Some companies are or anyone in particular can be given a discount, but if the creditor does not want to take advantage of the discount, it could be withdrawn. So that's when it is here. You write it in. Then cash refund. Maybe you don't want it, you just ask for a refund for your money. So they are giving a cash refund here. Then on debit side, the cash suppliers. These are the creditors, so they are finally paying their cash. It's included here. It's included under the cash column. Check under the bank column. So the suppliers. Return outward. Return inward is maybe something that the company, your customer returns your goods to you. Maybe they don't like it or they don't accept it. The company refers to it as return inward. But when a company itself returns a good to a supplier that maybe they don't want it, so it's like on two sides. From A's perspective, if I return goods to B, it is referred to as return outward. Therefore, B is referred to as return inward. So it's two sides. And credit notes received. Credit note received. Like I said, debit notes issued or received, like I used that last time. It's like maybe a written document telling the. For credit notes received, in credit notes issued, like I said, on the debtors control account, it's like the good guy counterpart. Like when the company sends a note to the customer telling them that there's a reduction in the amount which they owed. It's like reducing the amount which they owed. Maybe there was an overcharge. So it's just like the side. So on this side, it's like this is what the creditor now is receiving. The creditor is receiving it, but for the debtors control account, the company is issuing it to them, telling them overcharge, correcting and overcharge on any bills. So contra entry, like I said, where the supplier is also a customer. Bills payable. Like I said, in the total debtors control account, bills receivable is like a written promise of to pay a particular bill. So under this bills payable here now, the company is writing a written promise to pay a particular amount to its suppliers. Yes. From the bills receivable, it was coming from the customers, but now it's the supplier itself. The company itself writing a note of promise to pay later in the future. Then balance of the account, and we still ended up with the credit balance, because a liability account will obviously have a credit balance. So let's solve a work example.
So everyone, this is the question of which will be opening the total debtor control account for Augustine.
So everyone, following the question which has been pasted, let's solve the total debtors control account question. I won't write the question on the board, I've pasted it already. So we're told that sundry debtors and credit balance in sales ledger. Normally, a total debtors control account, it's a debit balance. So for if you see credit balance, unless otherwise stated, it's when you now see credit balance in sales ledger, that's when you write. Let's start. January 1996. Sundry debtors, that's write it as balance brought forward. Same time. Remember to always write your Naira sign. It's written as 14,581. To save time on all this addition and subtraction, I'm going to be following what I've solved already. So credit balance in sales ledger, that's also balance brought forward. It's a credit balance. So you write here, balance brought forward 902. Still January 2, right here, January 1996. So the following transactions took place during the month. Bad debt written up, and if you check your format, where's bad debt? Bad debt is on the debit side. Sorry, the credit side of the control account. These are like writing before. I just decided that let's all follow. Let's solve it together. Bad debt is 627. So you just be imputing it once you know your formula. Then discount allowed 1,593 right here. Discount allowed 1,593. This mark. Then sales return and allowance, that's the same thing as return inward here. Return inward. Return inward is how much? 840. Then bills receivable, which was accepted. Bills receivable is also here. Though mine accepted, it's still the same thing. Bills receivable 8,351. Cash received from customer 32,706. Cash, you can just write cash received 32,706. Credit sales is how much? 37,906. The format is here, so just be following the format. Credit sales 7,906. Then balance on, you see somewhere that you balance on sales ledger set off. That's that contra entry we talked about, and it's on this credit that you input. Just write set off. And it was given to be 1,498. And what else? balance at close. How much? 1,279. It will be here. Because we have not a balance. When you balance at close, as balance carried down. 1,279. Then what is the question? Your sales ledger credits balance 1,279. So normally, in total debtors control account, it's meant to give you a debit balance, but here they are saying balance at close, sales ledger credit balance. So for you to get credit balance, it should be characterized by brought down. So for you to have a credit balance, which will be on the credit side here, you have to first write balance carried down here, 1,279. Then you now come down again. Right. So in this case, since there was balance brought down, in this case there will be two balance brought down, because you still do your addition and subtraction before you get the balance carried down, which will now give you your debit balance. But since it's balance carried down here, in total sales ledger credit balance, so you first write it on the debit side as balance CD, then you come down here and write it as balance BD, 1,279. That's it. The credit balance will be characterized by first now. Then we do our subtraction. This side is obviously going to be greater than this side. So once you add up the figures for here, you minus it from the sum of here, you get your balance carried down as 7,000. As the difference. Difference will be 7,249. How did I get this 7,249? Let me explain. It's just I don't want to add it up here because I'm not equipped any calculator. You add up all the figures here, then add up all the figures from here to here, including this balance brought down that we got. You add it, then the difference between the two, this side is going to be greater than this side, as I've already solved. So the difference is what gave me balance carried down as 7,249. You can try it and you see it. That's it. So then the total of this side is 55,000, 53,766. Just right here, balance 53,766. And this balance carried down now come here to be balance brought down 7,249. Let me write this here clearly. Balance carried, let me trace it so it will be easier to locate. 7,249. So you can see now that we still have our debit balance as 7,249. That's then balance brought down. So you can see now we have two balance brought down as. Let me bring this balance brought down here, so that the balance brought down will be on, like, it's meant to be on the same line. 1,279. So in this case now we have two. The reason why I brought this balance carried down here, in the question it was written sales ledger credit balance 1,279. And to get a credit balance, like to get a balance brought down, it has to be a carry down first, which we put here as on the debit side. Then to get it on the credit side, you now write it as balance brought down. The same figure, 1,279. Then how I got the original one for the solving, balance brought down. Once you subtract the two, you add this side, you get 53,766. Add this side, then subtract the figure that you got from here. From the figure here, you get 7,249. Clean up. 7,249. So that's basically it. So all I was doing was just impute what I have, what I have in the format here, and then do it. If you have any question on this, please just put that down in the comment section. Or if you have any correction too, like if you anything I should have, any entry I missed or anything I did wrong, you can also correct me in the comment section. Now let's move to the purchase the creditors control account. Let's solve an example there.
So everyone, let's prepare Ojodu's creditors control account.
So this will be total creditors control account now. As you've seen in the question, I just posted the question, Mr. Ojodu. So now let's prepare his total creditors control account. If you notice in debtors and credit, in total debtors and total creditors, bills receivable is on the credit side, bills payable is on the debit side, credit notes issued is on the credit side of total debtors, credit notes received is on the debit side of total creditors. So it's basically like just vice versa, like the opposite of it. Return inward is on the credit side of total debtors, return outward is on the debit side of total creditors. Discounts allowed, discount received is just like the opposite side. So once you've gotten or you remember one part of like discounts allowed now for total debtors, which is on the credit side, you know that discount received is on the debit side of total creditors control account. So let's solve this. On July 1st, 1995, click this date, July 1995. It's a creditors control account, so it has a credit balance, remember. July 1995. So in the question, it says sundry creditors, that's like the balance brought forward. Anytime you see sundry debtors or sundry creditors, you know it's balance brought forward or balance, yes, whatever. So sundry creditors, just write the balance brought forward, 9,724. You can see what the same way in the former question, they gave us credit balance in the sales ledger. Now it's debit balance in the purchasing ledger. So you write here, balance brought forward. We're always having two balance brought forward, 660. Then the following transactions took place during the month of July. Payments to creditors, 28,368. And informant is here on the debit side. Payments to creditors, 28,368. Then bills payable accepted. It's definitely be on the debit side because on credit side of total debtors it was on the credit side. Yes, so bills receivable was on the credit side, so bills payable will be on the debit side here. Bills payable. Remember we said bills payable are a written note of promise, a written promise by a company to pay out an amount which is owing at a later date. So bills payable 15,129. And discount received. Discount allowed is on the credit side of total debtors. So discount received will be on the debit side of total creditors. Discounts received. 1,838. Thank God this marker now is now functioning well. Then purchases return. Purchases return is the same thing as return outward. And in credit side of total debtors, it's on the credit side. The bills return inward is on the credit side of total debtors control account. So return outward will be on the debit side of total creditors. I'm just trying to rush so that this video will not be too long. It's already getting too long. Return outward, 749. Now, what else? Sales and purchases ledger transfer. You see it in question. Don't get confused. The same thing as set off. The same thing as contract entries. Ledger transfers, sales and purchases, two of them. Anytime you see just the two names, interdebtedness, like the two of them, it's a set off. So, set off, just write set off. What's the figure? So set off, 1,498. Then what else? Credit purchases is here. Under Well, I think you should just look at your format. You know that credit purchases is here. Credit sales is on the debit side of total debtors. Credit purchases is 47,317. Then purchase debit balance at close. Remember what I said? Now they are saying now purchase debit balance. Like in the last question, they said it was credit balance, and we had to write it on the debit side as balance carried down before we now wrote it on the credit side as balance brought down. Now they are saying now that purchase debit balance at close, so it's to have a debit balance. Like they want it to have a debit balance, but normally creditors account has a credit balance, so that's why it will have two balance brought down. So purchase debit balance at close. If you want a debit balance, we need to first write balance carried down. What did they write there? They said 856. So now it's on the credit side. Now we can now write balance brought down. We bring it down so that, because balance brought down is usually the last thing. So balance brought down 856. So we've solved for that one. You just write, there's nothing there. If you just see purchase debit balance at close, you know that they want you to have the balance brought down 856 on the debit side. So you first write balance carried down on the credit side before you now write it here. Then you now do that your addition and subtraction. You now add everything here and add everything here. Since it's going to give us a credit balance, this side will be bigger than this side. So if you add everything here and add everything here, you subtract the amount you get here from the amount you get here. And if you add up here, you get 50. I already solved it, so I don't want to start adding it up here. If you add it, you see it. If you add everything here, you get 57,897. Add it up now. 57,897. So once you add up here, you subtract whatever you get here from 57,897, and you get your balance carried down as 9,655. You have another balance brought down 9,655. So you can see here now we have two balance brought down. So if you notice, even in this normal one, this one we got balance brought down 9,655. We first had balance carried down with 9,655. You can't have a balance brought down without having a carried down. That's why in the question, when they gave us a debit balance of 856, we needed to first write it here, balance carried down 856, before we wrote it here as 856. Then we now add up everything to get the original total creditors balance for this account as 9,655. So we've gone somewhere, at least. We've gone somewhere. If you have any question, just write it down in the comment section. And that interest charge on overdue account, yes, I said we should make research. I've done my research. Let me explain it. Interest charge on overdue accounts now. That is that interest which is debited on the debit side of the total debtors control account is what a company uses as a consequence or a penalty fee for customers who pay late. There's some customers who pay they don't pay on time. So it's like an incentive for customers to pay promptly and as at when due. Some after writing bills receivable, like that's the promise to pay, then they still default. So the company will then add a consequence or penalty fee, like in addition to whatever they are owing, you add that penalty fee. So that next time it will serve as a deterrent to other people or to themselves. Like, so next time you will pay on time and promptly. So thank you for watching. Thank you for staying. People that stay up to this point, I'm sure you must have learned something. So if you have any question, just note that down in the comment section. Any suggestion, any correction at all, note that down in the comment section. And please, you guys should please share this video. Share it to any accounting department, any banking and finance, people that you know would love to know about control accounts or accounting itself, okay, please you guys help me push this video. Bye, have a nice day.